Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. So today we're looking through quite a stack of forces. It feels like the financial world is, well, maybe suffering from a bit of cognitive dissonance.
That sounds about right. We've got global peace initiatives, then this, technical civil war brewing inside Bitcoin.
Exactly. And all this alongside probably the most dramatic market reversal we've seen, well, all year.
Yeah, that's what we need to unpack today, September 30th, 2025. Figure out where this sudden market confidence is actually coming from. I mean, yesterday, ETF outflows were huge, right? Over $500 million out.
And today, the global crypto market cap just crossed $4.06 trillion. That's up, what, 1.4%? And those outflows just flipped. We're seeing nearly $200 million in inflows.
So the question is, what's driving it? Is it the geopolitical news? Is it monetary policy finally kicking in? Or is it something deeper, like in the actual network developments?
We've got analysis covering all that. A major geopolitical peace plan, specific market data, ETF flows, and a really technical look at the battle for Bitcoin's future. But let's start with the big picture. The external news that seems to have kicked off this surge in confidence, stability.
Right. We saw President Donald Trump announce this, pretty ambitious plan. Eternal peace in the Middle East, between Israel and Palestine.
With broad involvement from Arab leaders, too, it seems.
Yeah, they put out a very detailed 21-point plan and proposed setting up a board of peace.
And what's really interesting, maybe surprising, is how well it seems to have been received, at least initially.
It does seem that way. The state of Palestine, citing Wafa news agency and officials in Gaza, apparently welcomed these sincere and determined efforts.
Which is fascinating because historically, crypto markets, especially Bitcoin, they tend to thrive on global chaos, don't they?
Absolutely. Just think back to the volatility we saw during the Russia-Ukraine conflict or Remember the stress on DeFi markets back in 2023?
Yeah, total chaos.
Yeah.
When the world feels unstable, crypto often gets framed as that ultimate hedge, right? An asset outside traditional control.
Exactly. But this news today, it's the opposite. It's anti-chaos news. It signals, potentially, reduced global tensions, stabilized sentiment.
So if the need for that crisis hedge maybe goes down a bit, what does that actually do to the market?
That really is the key question, isn't it? If that primary narrative, Bitcoin as digital gold during wartime, if that weakens, does that hit its value?
You'd think so, maybe, yet the market rallied hard today.
It rallied, yeah, but look closely at the split in those inflows. The total was about $196.6 million, right?
Right.
But Ethereum ETFs dominated. They pulled in $122.6 million. Bitcoin ETFs, only $74 million. So ETH way outpaced BTC.
Okay, help me break that down. Why? Why would that split be so pronounced? If we have global stability potentially increasing, why is the number two asset doing better than the traditional sort of safe haven crypto?
Well, I think it's because stabilized sentiment lets investors look beyond just hedging. They start looking towards growth again. Geopolitical peace, maybe coupled with economic recovery in the region, it fuels more confidence and liquidity overall. And Ethereum, which is often seen as like higher beta, more growth-oriented.
Tied to DeFi, NFTs, scaling?
Exactly. It benefits more when that macro risk seems to be fading.
Yeah.
Investors aren't just seeking safety anymore. They're looking for maybe renewed optimism, things like DeFi, layer 2 developments, which stability allows.
That makes a lot of sense. And then there are the ripple effects to consider. Israel's a huge hub for crypto innovation.
Massive.
Peace could really accelerate tech investment there. And for the Palestinian region, potential for economic recovery, maybe integrating crypto for things like remittances or aid distribution.
Precisely. It shifts the narrative. Crypto moves from just being a shield against volatility to potentially being a mainstream tool, helping with localized adoption and economic inclusion.
It strengthens the case for crypto as like actual global infrastructure.
Yeah, exactly.
Okay, speaking of infrastructure and timing, let's merge this stability idea with the calendar, because we're getting really close to a predicted major point in the Bitcoin halving cycle.
Yes, this context is critical. So the last halving was April 19th, 2024.
Right.
And if you look back historically, Bitcoin tends to hit a new all-time high roughly maybe 18 months after a halving.
Which puts us right about now.
Yeah.
October 2025 is smack in the middle of that prediction window.
It is, and the market's certainly teasing it. Bitcoin was trading around $114,111 today, September 30th. That's a good recovery after it spiked up to $116,000 earlier in the month.
And that halving narrative, it just reinforces the idea of scarcity, doesn't it?
Yeah.
The sources we looked at predict this could boost adoption, both retail and institutional, by maybe 20, even 30% next quarter.
And you've got this positive cycle being potentially amplified by monetary policy, too. Remember, on September 17th, Jerome Powell and the Fed cut rates by 25 basis points.
And signaled more cuts might be coming.
Exactly. So what happens when the Fed starts easing, making borrowing cheaper, while geopolitics are calming down?
Well, it sounds like a pretty powerful combination for risk assets.
It really is. Lower interest rates generally make safer things like bonds less attractive, makes getting loans easier. So potentially more capital gets freed up to flow into things perceived as riskier, like Bitcoin and other cryptos.
So you pair lower rates with global stability.
And you get, theoretically, the perfect setup for institutional money, maybe more retail money, to jump in, anticipating that historical post-halving all-time high.
Okay, so the macro winds seem favorable, hundreds of millions flowing back in today. But that brings up the foundational question. Can Bitcoin itself actually handle a new wave of interest or inflows?
Yes.
Let's pivot now to the internal stuff. That technical war over scalability, the conflict between Bitcoin Core and this fork, Bitcoin North.
Right. This is where, the philosophy of decentralization really crashes into the practicalities of making the network work. Bitcoin North, they market themselves as being conservative, protecting Bitcoin's value.
But the critics.
The critics argue their actions are actually blocking the innovation Bitcoin needs to scale to become usable money for lots of people, and ironically, maybe hurting decentralization along the way.
Okay, let's get into the technical weeds a bit. Mining architecture seems key here. Core developers have adopted Stratum version 2, right?
Yes, Stratum v2. It's an open protocol. The idea is It gives individual miners, even smaller ones, more freedom to choose which transactions they include in a block.
Which should improve transparency and decentralization. More people making decisions.
That's the theory, the open source path. But Bitcoin North supporters, they're largely ignoring V2.
What are they using instead?
They tend to favor proprietary alternatives, like this thing called DTM. It comes from the Ocean Mining Pool, which is very closely aligned with the North camp.
Okay, DATM. What's the problem with it? Give us the aha moment for the listener. Why does switching to proprietary software matter so much here?
Well, the core issue really comes down to control and, frankly, exclusion. DATM isn't open source. That basically locks miners using it into the Ocean Pool's ecosystem.
Oh.
And crucially, critics say it actively disadvantages smaller miners. How? By slowing down how fast block data gets shared across the network.
And why is that bad for small miners?
Because it increases their risk of finding a block, doing the work, but being slightly slower than a giant pool. So the network ignores their valid block, it gets orphaned. They get no reward.
So this technical choice pushes power and the mining rewards towards the biggest, fastest operations.
Effectively, yes. It centralizes control within just a few large pools who can afford the infrastructure to overcome that propagation delay.
So North claims they're protecting decentralization, but their technical choices create these bottlenecks that only the giants can really thrive in. It sounds less like just a technical disagreement.
And more like, what, a constitutional crisis for Bitcoin?
Yeah, something like that. High stakes, anyway.
It's a good analogy. And it doesn't stop there. It extends to layer 2 solutions, too, like the Lightning Network, meant to make Bitcoin faster and cheaper.
What are they doing there?
Bitcoin North software is reportedly filtering out certain transactions needed for layer 2 solutions to work efficiently. They're basically using their position to slow down usability, slow down efficiency, blocking the very innovation that's supposed to make Bitcoin work better for everyday payments.
Wow. So a deep philosophical divide being fought with code, and it directly impacts how usable the asset actually is.
Pretty much.
Which leads us perfectly into this next kind of paradox we found in the sources. While these internal forces are battling over decentralization, major institutions are moving quickly to integrate, well, centralized versions of this tech.
Yeah, this is fascinating. You've got this convergence happening. TradFi, traditional finance, meeting decentralized tech, SWIFT. You know, the backbone of global banking messages is working with Consensus.
Consensus brings the deep Ethereum expertise.
Right. And together they're developing a shared digital ledger. The goal, real-time cross-border payments.
And this isn't some small pilot. We're talking over 30 major financial institutions involved. Bank of America, JP Morgan, Citi, big names.
It looks like a fundamental restructuring of their core systems is being explored.
But here's the catch, right? The insight from synthesizing these sources.
Yes. They seem to be adopting the technology, the shared ledger aspect, not necessarily to get rid of intermediaries like themselves, but to make their existing consortium more efficient.
So the goal is 247 speed and efficiency, using blockchain tech, but keeping the centralized control.
It appears so. It's like they're embracing the utility of the tech, but maybe not its original philosophical premise of decentralization, redefining what adoption means for them.
Okay, that's a picture of centralized efficiency grabbing the tech.
Huh?
But we did see a counterpoint, didn't we? In U.S. regulation, specifically down at the state level in Wisconsin.
We did, yeah. Wisconsin lawmakers introduced this bill, Assembly Bill 471. It's sponsored by Republicans.
And it aims to exempt certain crypto activities from money transmitter licenses.
Exactly. And this is why it's important. It targets the foundational decentralized activities. Things like crypto mining, running nodes, staking, even blockchain development itself.
As long as it doesn't involve swapping directly to legal tender or bank deposits.
Right. It's potentially precedent-setting because it protects the activity of maintaining the decentralized network. It means developers, stakers, people running self-hosted wallets or nodes, they might be able to operate without needing the same heavy licenses designed for, say, big centralized exchanges.
So it's like a localized regulatory pushback for decentralization, contrasting with that SWIFT consortium approach.
That's a good way to put it.
Interesting tension there.
And while we see these debates in the U.S., the real sort of state-level infrastructure integration seems to be accelerating elsewhere, particularly the Middle East. Let's look at the UAE. They're pushing hard to be a major financial and tech hub.
Absolutely. And the results can be pretty concrete. Look at the Dubai Road Transport Authority, the RTA. They used AI and big data. And got what? A huge improvement in bus times.
A staggering 50% improvement in their bus punctuality index. 50%.
That's massive for efficiency. What else did it help with?
Well, beyond just happier passengers, there were real environmental and operational benefits. Less unnecessary bus idling, so lower carbon emissions. They cut trip cancellations by 4%, and even improved passenger safety during bad weather because the AI system could adapt routing and timing in real time.
So AI isn't just experimental there, it's like core infrastructure now.
That's how they seem to view it, yeah, core infrastructure.
And supporting that idea of the UAE as a serious financial hub, we also saw news about multi-bank group expanding there.
Right. They're one of the world's largest financial derivative institutions, already headquartered in Dubai. Now they're opening a new office in Abu Dhabi.
And this new office houses their regulated subsidiary, YMX Global.
Exactly. Regulated under the UAE's Securities and Commodities Authority. Multibank offers something like 20,000 different financial instruments, and that includes digital assets.
So their expansion fits right into the UAE's strategy, cementing themselves as this world-class regulated hub for both traditional finance and digital assets.
It aligns perfectly, yes. Shows serious intent.
Okay, wow. We have covered a lot of ground today. Let's try a quick recap.
Good idea.
So first, we have potential geopolitical peace, seemingly boosting market confidence, maybe shifting focus towards growth assets like Ethereum, not just Bitcoin as a hedge.
Right. Then there's the Bitcoin halving cycle context, pushing towards that predicted historical all-time high window, maybe amplified by looser monetary policy from the Fed.
But underneath all that positive macro stuff, we have this intense technical battle inside Bitcoin itself. Core versus North, fighting over the future of decentralization and scalability through things like Stratum v2 versus DTM.
Yeah, and the overarching theme feels pretty clear. Major institutions like the SWIFT Consortium are definitely adopting the technology, the shared digital ledgers.
But maybe not the ideology.
It seems that way. Even while these foundational protocol decisions, like DADM versus Stratum v2, could actually threaten the decentralization they claim, or perhaps used to claim, they protect. The tech is winning, but the original ethos, it's being challenged from inside and out.
Which leaves us and you, the listener, with a really provocative thought to chew on. One source mentioned, almost as a side note, that the U.S. government might actually shut down tomorrow, October 1st. So if the global market barely reacts to potential U.S. domestic chaos, now perhaps because global geopolitics seem calmer and institutional integration is making crypto feel more normal.
What does that mean?
Yeah, what's the takeaway?
Has crypto kind of matured? Does it not need crisis anymore to prove its value? Or is it actually risking becoming just another centralized, albeit highly efficient, layer within the existing financial system? Where does its unique value really lie now?
Is it resilience during crisis or innovation during peace?
Yeah.
Or something else entirely?
That's definitely something to mull over this week.